Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase, a podcast where we focus on market events that truly matter. Now, oil prices plunged sharply overnight as both WTI and Brent crude oil prices declined by around $8 per barrel on concerns that global demand could be dampened due to China's mobility curbs to counter the resurgence of COVID cases. In equity space, US and European equities rallied on the prospect of the first face-to-face talks between Russia and Ukraine in over 2 weeks, and those talks are scheduled to start today in Turkey. However, news reports suggest that there is appearing to be a split between NATO allies in terms of any potential peace deal to be struck between Russia and Ukraine, especially after US President Biden's comments over the weekend. French President Macron has commented that NATO members should not escalate either with words or with actions. In the currency space, the main focus yesterday was the yen, which fell sharply across the board with dollar yen hitting a 6-year high above 125. Over the past month, yen, which has traditionally been a safe haven, has somewhat surprisingly declined by over 6.5%. The sharp decline yesterday comes after Bank of Japan declared its intention of buying unlimited amount of bonds to defend the 10-year Japanese government bond yield trading band, the upper band of which stands at 0.25%. Now, the move by Bank of Japan to cap bond yields comes at a time when government bond yields across US and Europe have risen sharply over the past month. What this means is that interest rate differentials between US and Japan have increased, exerting a downward pressure on the yen. Policy divergence is a strong headwind to Japanese yen, and with fiscal year ending on the 31st March, which is Thursday, volatility is likely to remain elevated this week. Now, near-term technicals are flagging that yen remains oversold, particularly versus the US and Australian dollar, and we expect at least some consolidation or potentially a robust correction in the days ahead. However, despite the possibility that yen saw a capitulation trade yesterday, it will likely require a signal from Japanese monetary policy change to trigger a reversal in markets' perception that Japanese yen remains an optimal funding currency. In the near term, we see 125.2 and 126 as key resistance levels that may be tested in the coming days, whereas a move below 122.5 could mark a start of reversal of the sharp yen weakness we have seen over the past month. Please feel free to check out our daily FX Navigator for more details and trade ideas. Now, if you enjoyed the podcast, please don't forget to rate and like it. Thank you for listening, and we wish you a very happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.